All right, so you're ready to buy a home. Congratulations. The first step in this entire process is getting with a mortgage lender and getting yourself pre approved. It's so important that this is step one because a good lender needs to thoroughly look through your income, credits, assets to ensure there's no speed bumps. Give you the confidence that you know exactly how much you're pre approved for. I can't tell you how many buyers I've come across that have found a house first, then went to the pre-approval process only to find out that they didn't qualify for the home of their dreams. You need that confidence, and these days most sellers and list agents will actually require that pre-approval letter before you can even access the house. So what all can you expect throughout this entire process? Well, first things first, I want to briefly talk to you about the timing aspect of all this. In my opinion, I'd say once you reach about 6 months from your ideal closing date, it's time to make that pre-approval appointment. Maybe this is when your lease is ending. This way, you're not waiting until the last minute so the lender can potentially guide you on anything needed to put yourself in a better position. By this, I mean maybe paying down some credit cards to boost your credit score. Maybe it's paying off the remaining auto balance so we can omit that payment altogether from your debt to income ratio. Maybe asset wise, you're just shy of enough money needed for your down payment on that ideal target price point. Whatever it may be, if you have time, the lender can point you in the right direction so you are a stronger buyer when you do go under contract. You'll also want to make sure that you give yourself enough time to find the right house, actually get your offer accepted, pass inspections, make sure it appraises, and etc. In an ideal world, you would give yourself a small window from when you move out of the current home and then potentially spruce up the new home and have to move in. So maybe a couple weeks. So let's say your lease ends at the end of June. Well, rewind from there, you could be closing as soon as May 1st to avoid that double housing payment because with a May 1st close date, your first payment isn't due until July 1st. Rewind even further from closing May 1st, you could be going under contract in mid-March. So rewind from that, and it's going to take you the time needed to find the right house, like I mentioned. I also wanted to talk to you about another really important term, debt to income ratio. So what this is we look at your current monthly obligations from your credit report, and we look at your current monthly qualifying income, and based on the maximum debt to income ratio, we'll know how much house you can afford. Now we'll move on to credit. So the middle of your three scores will end up being your actual qualifying score, and this is very important in determining what loan program is best for you. I will say that with our tri-merge credit report, which is specific to mortgages, it will very likely differ from whatever source you're using because there's 3 bureaus, there's different scoring models, there's different scoring versions. So I can't tell you how many times I've explained the score to someone and they said, well, that's not what I saw, but we have to base it off of our tri-merge credit report. So aside from score, we're looking at your current monthly obligations, car payments, other installment loans, student loans, credit card minimums. Anything on your report that you're actually obligated to pay, we're going to include that in your debt to income ratio. Now let's take a deeper dive into the 3 main pillars. So we'll kick this off and we'll talk about income. What we're looking to do is figure out your monthly qualifying income. If you're a salaried employee, this is pretty easy. We take the annual salary divided by 12. That's the monthly income. But what if you have some type of variable component, bonus, commissions, overtime? We'll likely need to collect end of the year pay stubs the past 2 years from you because we take a 2-year average. But what if you're self-employed? Well, in that case, it's a little more difficult and we'll have to collect the prior 2 years of taxes filed in order to do a calculation of the qualifying income. Well, right now I'm recording this in March 24 and people are doing their 2023 taxes. Is it more beneficial for you to file now or should you wait? Well, a good lender is going to help run your file and determine exactly what to do. Now that we've filled out the application, pulled credit, and verified all the information with your supporting documentation, the lender will know exactly the best way to structure the loan for you. Then we'll take your file, run it through our automated underwriting system. It's going to analyze all the information, assess the risk levels, and state whether or not it's approved. Once approved, we'll be able to send you that pre-approval letter and you're ready to hit the pavement and go house hunting. I hope this helps, and if you have any questions, drop a comment below. Don't forget to hit that like button, and I'll talk to you soon. Last but not least, let's touch on assets. So you will need money for both the down payment and the closing costs, and we will need to source all that money. Let's say in determining what's the best down payment for you, do you have minimal funds so you have to do the minimum down, maybe 3 or 3.5%? Do you have a lot of money in the bank and you want to do 20%, but that might not be the best financial move for you? Well, that's what I'm going to help you to determine. Like I mentioned, all this money has to be sourced. So we're going to collect the 2 most recent bank statements for all accounts you plan to source funds from. Got that money under the mattress? Well, you need to get it in the bank now because we have to source all large deposits. You might actually need some reserves too, and that's just money left over after all the down payment and closing costs. Is mom planning on gifting you money? That's amazing and totally acceptable, but we'll also have more documentation on that once you go under contract.